Hey, what's up guys? Crypto Baron here with episode 15 of the Crypto Times. So welcome back to the greatest show on earth. God damn it. Alright, the best show on YouTube. Alright, fine. The least cringy crypto show? Alright, I can live with that. And guys, you have no idea how many messages, emails, comments I get asking for what coins to buy. These are easily the most annoying questions I get. So today we're going to talk about trading and how we can apply some of the most successful traders' philosophies to crypto. Now the first and most important concept that I really want to introduce you to is that TA, technical analysis, is largely bullshit. TA is kind of looked down on in the investment world in the first place, and those are inefficient markets, let alone in markets so crazy and volatile and inefficient as the crypto markets. So one of the things that I want to show you is this gambler's fallacy, Monte Carlo fallacy. Now this is so fundamental to investing that it's actually a part of the Series 7 exam. So what gambler's fallacy means is you see something in the green for so many times that you start to expect and essentially bet on that it's due for red. Now, this applies to people just drawing their trend lines, which is essentially using hindsight, and that's a different thing called the Texas sharpshooter rule. What the Texas sharpshooter rule says is somebody shoots the side of a barn 10 times, and then afterwards they walk over and draw a target around the cluster of shots, which is essentially what people who draw trend lines and are doing this charting and technical analysis actually do, because they're drawing these lines after the fact, and then markets happen, the lines get broken, and then they just draw new trend lines and pretend that those are the new rules that this thing is functioning within. So I do not subscribe to technical analysis in my career in finance, and I most certainly do not subscribe to technical analysis in the crypto space. So how can we take advantage of this? It's important to remember that the attention spans are so low in the space. Everybody's in that get-rich-quick chasing pumps like a bunch of lemmings. That counterculture, I believe, is one of the best approaches that you can take. You buy up good projects when nobody's paying attention to them, or when they're in slumps, and sit and wait for that time when the hype is going to come, when the news is going to come, and then when all those short-term lemming pumpers come in, you take advantage of it. Just like this guy. Warren Buffett, generally regarded as the greatest investor of all time. Until me. Stupid thing. Okay, so be fearful when others are greedy, be greedy when others are fearful. This is a counterculture investment philosophy, but boiled down in its simplest format: buy on red, sell on green, buy low, sell high. This has been a remarkable bull market and highly profitable for us speculators, and it's been pretty difficult to miss, to be honest. I'm a firm believer in just not beating yourself. Grab legitimate projects that are experiencing significant development and hodl. Follow the actual news and don't let knee-jerk price reactions dictate your actions. Ethereum, for example, has had a rougher week, still experiencing the most significant development from the industry, from everyone ranging from consensus to the members of the Enterprise Ethereum Alliance. Even Visa now has job postings up looking for Ethereum developers, which really is a revelation that seems to be flying way under the radar. So buy good projects and hold. Just don't beat yourself. But how do you find good projects? What do you look for? Well, does it solve a pain point in the space? Is it something that's already being done? Who are the developers? What have they done? How transparent are they about the project? What is the community support like? Will it fall to pieces against adversity? And check the rich list, especially if it's a small cap project. Pumps are great, but dumps are depressing. You don't want something that's essentially centralized into some big whale who's going to has undergone the giant accumulation phase and is getting ready to dump it on you. Now follow these rules and stay disciplined and stay current, and you will excel in the space. Now personally, I like small caps. Warren Buffett actually says that he is envious of the smaller investor because they can grab higher returns by going after these smaller cap growth stocks. I apply a similar thing to the crypto space. And this is, quite frankly, how we found BitBay back in episode 4, about 20x ago at a quarter of a cent. And now that's not to say there isn't a lot of money to be made in these other projects. The rising tide has raised all ships. The bottom 100 of CoinMarketCap are at 25 million. Just a few months ago, 25 million used to put you near the top. So stay sound, stay disciplined, and even in much slower growth markets, you're going to make great money. Now on that note, people who take short positions, is playing in traffic not enough of an adrenaline rush for you? In fact, we have a special guest today. We have Jin Yang from Silicon Valley, who just wanted to chime in real quick on his thoughts of people who take short positions in the crypto space and why they do such a thing.
Because you're fat and poor.
My sentiments exactly. Thank you, Jin Yang. The last technique I want to talk about is a front-running technique. One of the best investment strategies is to just get in before institutional money does. And that's one of the reasons that the whole crypto space presents such an amazing opportunity right now, and why we've started to see this really blow up lately. More specifically, I want to talk about Economy. I covered Economy back in episode 5, gave it a glowing recommendation at 30 or 40 cents, and I still feel very strongly about it. I'm still a super bull on Economy. I'm actually personally not planning on selling at anything less than $50 a pop. I don't know if that's going to be anytime soon, but I really love what they're done. I love what they're doing in the space. That being said, they present one of the biggest dangers, I believe, to the smaller investor. Economy kind of presents this uber whale, where they will be able to manipulate markets and essentially do as they please in the crypto space with the kind of money that they'll be able to leverage from project to project. That being said, ICNX, this digital asset array here, listed here, are the holdings that they have right now. So Economy is going to be going public. They're going to present a fiat gateway where people will be able to buy in with, say, $5,000 and essentially put it in this passive, what is essentially an ETF, an exchange-traded fund, where people can automatically be diversified into this weighted index of cryptos. Now, what does that mean for you? That means you can take a look at this list and you can just imagine how much money is going to get flooded into these specific cryptos once this thing goes public. And once people are, say, your grandmother could very easily log into Economy, create an account, and say, okay, $10,000 into ICNX, and then they distribute it for her. They diversify it for her. They follow and do all this stuff. So you can look at some of the smaller cap cryptos that are presented on this list. You can buy in, and then once this flood of money comes in, obviously those are going to blow up pretty solidly. Now the other hand of that is to be careful, because when Economy does dump, or what they do is they rebalance. If something lifts too heavily and it exceeds 15%, they will automatically rebalance, but otherwise they'll do periodic rebalances. But when they do these rebalances, if one of these positions is overweight, they will dump. And when they dump, it's going to be a lot of money, and we see the volatility in crypto and what happens here. So that presents an absolutely amazing opportunity. One of the things that I will add about the volatility of crypto is that derivative products are coming. Now, derivative products, when they get added to these underlying crypto investments, they're going to blow the values through the roof again. And not only are they going to do that, but they're going to smooth out this volatility, because these derivative products, which are options, which are futures, which are forwards, when you trade these derivatives, what you're essentially doing is actually trading the underlying volatility. And when you're trading that underlying volatility, you're smoothing it out. So That's going to be a great thing for us in spiking the value, and it's also going to be a great thing in helping smooth out the volatility, which will probably have a negative impact on you day traders out there, but I think you're awful people anyway. And that's all for today's show, guys. Make sure that you like, subscribe, and hit that tip box. Send me everything that you can. I'm going to be in Aruba next weekend, so I'm going to try and get another episode up this week, looking probably Thursday-ish. Otherwise, take care. Have a great week. Talk to you soon. Thanks for all your time and attention.